Breakouts, the most important chart setup, yet most beginner traders get it wrong. You can visualize the importance of breakout levels on the chart here behind my head. Look at how smoothly this ticker moves up when it is above its breakout level represented by this cyan line versus how it struggles while below that level. This is, of course, a custom study that I have built myself, but what's even more important than just an indicator is a strategy that proves the worth of an indicator. So I've also built a strategy around this study. And whenever you build a strategy, you also need to build a scanner that finds you the stocks currently breaking out. And in today's video, we will cover all three of these codes. And if you make it to the end of the video, I might even give some of them away for you. So make sure you stick around for that. If you find yourself interested in any of the codes covered in today's video, they, along with over 150 other custom ThinkorSwim codes, are available for easy import over on my website, daytradingstrategies.net. There's a link in the description down below. I know you want to jump straight into the strategy, Trey. How do I make money on this? That's, of course, the fun part. But the reason I built the indicator separate from the strategy is so that I can talk over exactly how it works. Because if you don't fully comprehend how this breakout level is being objectively defined, then you won't be able to correctly follow the strategy. And if I just give you a strategy that you don't understand the bones of, you're going to lose money when you try to trade it. I promise you that. So let's talk about the bones of it. Let's go over exactly what the equation behind this indicator is. Then I promise we'll move into the strategy and scanner. So the custom code comes with an input parameter that you can easily change by the name of length. By default, the length is set to 20, and the length value here is used in two separate areas within the price action equation to determine this cyan line. The first and most obvious is that the first part of the equation is the highest high value out of the last X number of bars. So if you leave it by default, we are pulling the highest high value out of the last 20 bars. This is a purely price action indicator and strategy, by the way. I think that's a big reason why people love breakout trading, because there's no hiding from it, right? There's no lagging indicator like, is the stock gonna break out or is it not? It's either breaking out or it's not right now. So just to clarify that as well, this is purely price action. It's all purely based on what the stock is doing on today's candle versus obviously the look back length that we have set to the default of 20. So first part of the equation, once again, just so you understand, highest high value out of the last 20 bars. Now I want to show you visually what just that first part of the equation looks like. So what I've done here quickly is I've made a clone of my breakout study. I want you to take a good look at how this cyan line looks right now on this chart. I'm going to turn off my actual breakout study and turn on this clone that only plots that highest high out of the last 20 bars. If we hit apply, you can see now, okay, we are now seeing visually that highest high out of the last 20 bars. Why is it so different from our actual breakout study? The second part of the equation in the actual study that we run and we built this strategy off of is that we pull the lowest low value out of the last X number of bars back using that same input parameter named length. So by default 20, we pull the lowest value of this cyan line. So out of the last 20 bars, what was the lowest value of the highest high out of the last 20 bars? Does that make sense? So if I turn this clone back off and I turn my actual study back on, you will see these low value lines continue a lot more to the right than they do. They don't automatically adjust straight up when the stock breaks out above it. You see that here as I turn it back on. And what that just does is it gives us a much more visual representation of, hey, this stock is trading above blue sky breakout highs. This stock is trading above any local high areas it was before. It's just a lot easier to read and it makes a lot more sense, right? Once again, you can see very clearly on this chart here, and I've proven that it works with the strategy, which we're about to cover, that when the stock is trading above this value, it is much easier for it to go straight up because it doesn't have that local overhead resistance. You can see here when we're below this value, why does it sort of chop and struggle? Why doesn't Nvidia here just keep flying? Because it's below its breakout value. It's got overhead resistance trading right here above it. So it sort of struggles to break through, rejects. When we're above and clearly above, then we can take off again. And here is the strategy running on that same exact bit of Nvidia chart we were just looking at on the other screen. When we close up and above the breakout cyan line level, we enter the trade. When we close down and below that breakout cyan level, we exit the trade. Very simple conditions for exit and entrance, but we need to have some hard conversations about how the strategy actually performs. I've got my custom coded back test data labels running here in the top left of my charts, and I want you to keep an eye on this area of the chart for the next part of this conversation. There are two main ideas when it comes to building a trading strategy. There are reversal trading strategies and there are continuation trading strategies. Probably, obviously, what we are talking about here, really whenever you're talking about a breakout trading strategy, you are talking about continuation. You are looking to buy highs and sell higher rather than buy low, sell high, right? You're looking for a stock to prove that it's strong and to ride out that strength until the stock proves to you that it is no longer strong. I've been coding strategies in ThinkorSwim now for over 5 years. I'm the perfect person to have this conversation with you all. And let me tell you the two stark differences between a reversal trading strategy and a continuation strategy. The first and most obvious is this number right here, your win percentage. This strategy makes a lot of money. It's very profitable, but continuation trading strategies like this one typically have a lower win percentage. What they target is the other side of the seesaw. That's what I refer to as when building a profitable trading strategy. There is a seesaw. On one side sits win percentage, but equally as important on the other side sets your risk to reward ratio. And in continuation trading strategies, you are targeting that high risk to reward ratio. Meaning, for instance, in this trading strategy, the average win is over $3,400, whereas the average loss is only $842. That is why, even on a 36% win rate, this strategy is still extremely successful. That is uber important to understand when you're having conversations about profitable trading strategies. If I told a beginner trader or maybe somebody who isn't really active in the stock market at all that I only had a 36% win percentage, they would assume that my strategy sucks and that I lose money. But they're not thinking about, once again, the other side of that seesaw in what you are targeting with a strategy like this. Whereas obviously a reversal trading strategy typically does the exact opposite. I've actually now turned on my reversal trading strategy just so you can get a visualization of the differences that I'm talking about. This trading strategy also makes good money and it has an 83% win percentage. That is the side of the seesaw that you target for profitability with a reversal trading strategy. However, the average win, only $860. The average loss, $1,800. So once again, the balancing act between win percentage and risk reward is what creates profitable trading strategies. What I find to work best, at least what turned me into a profitable trader over time, is to trade a combination of continuation and reversal trading strategies at the same time. Don't just try to find one strategy that's going to make you consistently profitable. I think a lot of traders get stuck in that. And unfortunately, I've seen a lot of videos out there that tell beginner traders you should be targeting a 75% win rate and a 3-to-1 risk reward ratio. You want the God's honest truth, and I'd not want to burst your bubble or anything, but that doesn't exist. If there was a trading strategy that had a 75% win rate and a 3-to-1 risk reward ratio, we'd all just trade it and we'd all be driving around in our Lamborghinis. The market is hyper efficient. It's not going to allow anything that ridiculously strong to exist within it. You must accept some kind of risk if you are ever going to make money in the market. That's why you are allowed to make money in this game, is because you are taking on risk. With a continuation trading strategy like the one we're looking at here, that risk is that you can go on a cold streak. I mean, you can have 8, 9, 10 trades in a row where you don't see a winner. Whereas the risk in a reversal trading strategy like this one is that you can get smacked. Like sometimes you are going to take some relatively large losses when trading a reversal trading strategy like this. Go look at COVID. Sometimes you're going to take some pretty large losses relative to your wins. So those are the risks of the two different strategy types. And why I say you should trade a mix of both is because when you trade a mix of both in the same portfolio, they help to offset each other, right? When you're going through a cold streak on your continuation trading strategy, you'll still be chipping away most likely on profits with the reversal trading strategy. When you get smacked in the face with a large loss on the reversal trading strategy, you will be catching some large winners in your continuation trading strategy to offset that. So, rant over and maybe a little off topic for the central idea of this video, but basically the last 2, 3, 4 minutes in this video, just vital information that I have learned and what's turned me into a profitable trader. So I just wanted to share it with you all while we're having this strategy conversation. Anyway, let's now move forward with talking specifically about this strategy. We'll look at some other chart examples, some other time frame examples, and then of course we'll hop into talking about the scanner, because of course doesn't matter how good your strategy is if you don't have an associated scanner, if you can't find the trade setups to enter alongside the strategy. Let's take a look now at how the strategy performs on some different charts. I'm going to keep an eye on the total P&L and the win percentage of my custom backtest labels here in the top left. Let's go take a look at SPY. This is, of course, the S&P 500 ETF, a 32% win rate. Once again, very low, but $22,000 in profit. Looks good on the S&P 500 ETF. Let's click through some of the Mag 7. These are the types of stocks that I like to swing trade. Very strong names that have a lot of bullish tailwinds behind them. Tesla just up huge. Let's go look at like Microsoft. Microsoft also up huge. We go look at Apple along the same lines. Also up huge. Looks to be pretty good on the Mag 7 stocks. Netflix also up over $119,000. Let's go look at like one of my favorite charts to look at now, being XYZ. This used to be Square, used to be Block. I think it is still Block. I'm not sure why they changed their ticker to XYZ, but whatever, not the case. Why I like to look at this chart is because it has a, sort of choppy move here, then it has a big bull run, then a big bear run, followed by some more chop. So it's got a little bit of every kind of different market condition within it. And even on this, we actually have a 41% win rate, which on this strategy seems to be okay, and up $71,000. Of course, a lot of, if not most of that profit comes from this massive bull run. But what's very important to note here is that even when like this stock gets crushed, it doesn't give up those profits, because obviously we are waiting for the stock to break out. It sort of prevents you from trying to catch these falling knives, right? You get a little bit of chop going on here, but even on the back end, I mean, at some points we were only up $61,000. Even on the back end of some of this chop here, we've made over $10,000 to get back up to 71 grand as well. So it's actually done okay in this chop also. Once again, big winner, small loser, small loser, small loser, small loser, small loser, big winner. Once again, the point of a continuation trading strategy is just that. You're not going to win a lot, but when you win, make them big. When you lose, make them small. Now I've gone ahead and within the settings cog of the strategy, I've set up a Boolean check for whether you are going to use this strategy for day trading or not. If you turn on this day trading Boolean, basically it just ensures that your trades exit at the end of the day. You don't want any overnight holds, and it ensures that you will buy the first candle of the day if it opens up above this breakout level, because obviously you're not going to get the cross above that you typically look for, but that is what this check is doing. So just a couple of fixes to make that happen. So if I turn that on, of course, it's going to be broken on the daily now, but we hop down into the 5-minute and we can start to take a look at how the strategy performs on day trading charts. On XYZ, doesn't look that good. Doesn't look to be successful. On Nvidia, also doesn't really look to be successful. Let's try quickly the 1-minute time frame just to see if it's any better. And no, it doesn't look to be so. Let's go try a stock like Tesla. Let's kind of click through the Mag 7 again. Tesla is not down very much, but still down, still not successful. We also looked at stocks like Microsoft and Apple, but you're getting the idea here. A strategy like this, a breakout strategy, at least built in this way, potentially not successful on a day trading these larger companies. Now, there's some things you could try. Once again, in the settings cog of the strategy, you can try to shorten the length. Like, what if we make the length only 5 instead of 20? It's still really not successful, but maybe there's some other things you can tweak in the source code. But for right now, the way I have it set up, doesn't look to be all that good at day trading these types of moves. The breakouts just don't follow through enough to offset the risk reward ratio, correct? The win percentage is just too low. But let's take a look at sort of some of the types of moves that you would maybe be more so looking to take a breakout type trade on. Hertz just went crazy the other day as news came out that Bill Ackman was purchasing like a $20 billion worth of it or something. That happened right here. If you bought that breakout, and of course you're selling into the end of day, you did very well, and you've even done okay on the days since then. So these sort of more low float or just more news driven type moves might be what you look to target with a trading strategy like this as it pertains to day trading. Bull, this is Webull. This company just went public through a special acquisition company. If you bought it the morning it went public, this was like the big news. You of course did very, very well on that day. So doesn't look to be that successful of a day trading strategy on like the larger, more typical names you would trade, like the Mag 7 and those kind of things. That's okay. That's good to know, right? The point of building a strategy isn't so that it works on every single thing, right? You need to know what the strategy works on and what it doesn't work on. That's why back testing is so important, and having these back test labels just helps so much. Now we understand maybe we don't want to try day trading those kind of stocks with a strategy like this, but perhaps the more news-driven, low-float, kind of crazier moves might find some success with a day trading strategy like this. Now, hopping into the scan tab within ThinkorSwim, let's talk quickly about the scanner for this strategy. It's a pretty simple one. I do have 3 stock filters set up. Don't show me anything less than $5, less than a $50 million market cap, or trading less than 1 million shares of volume on the day. Those are just the types of stocks that I personally like to trade. You can adjust these stock filters to be really whatever you want. Just align them with the types of stocks you like to trade. Then the meat and potatoes comes from the study filter, in which I basically just copied the code from the study itself and set up the plot within it to only show stocks that are not just above the breakout level, but rather crossing above the breakout level today. So show me stocks that would be breakout buys according to the strategy on the day, rather than, any stock that broke out 20 days ago but is still going up. I don't really care so much about those. Once again, only crossing today. If we go ahead and open up, I have the same scanner running here in my left-hand column, and I have this scanner linked to my charts so we can easily click through. You can see here, Dollar Tree is doing just that. On the previous trading day, got a nice, big, strong breakout candle through the breakout level notified by the cyan line within the strategy itself. We also have CART, which once again got a big strong candle closing up and above the breakout level signified by the cyan line within the strategy. As you can see here on my website, I've already added the 3 codes from today's video. I've added the study, the strategy, and the scanner. And as you may notice, for the study here, I've actually put the TOS share link. I'm going to start doing this down here at the bottom of the homepage within the changelog. I'm going to start giving away some of the codes just so you can get an idea of the power of custom codes in ThinkorSwim, and so that you can see just how easy they are to import into your own ThinkorSwim application. All you need to do is copy this URL back within your own ThinkorSwim. You're going to go to Setup in the top right, Open Shared Item, paste in that URL, preview. Of course, it will let you know the name of what you are importing here, being DTS Breakout. You simply import it. Now, just like you would turn on any other study, you're going to go into your Edit Studies modal, DTS Breakout, double click to add it to your chart, and just like that, with like 3 mouse clicks and in 5 seconds, you can have the code running on your chart. So head on over to the website, once again, linked in the description down below this video. Scroll all the way down to the bottom, access that free code. Then, if you decide you would like to access over 150 other custom coded strategies, scanners, studies, etc. within ThinkorSwim, back to the top, click on sign up. I do offer both a monthly and an annual plan. The annual plan is brand new. Obviously, you're going to save some money if you sign up for the annual plan. But more importantly, you're also going to get lifetime access to a Discord server. This Discord server I foresee being very powerful because it will be full of people who have access to all these codes, right? So it should be a good place for a conversation to happen around what people are finding works best for them in their own ThinkorSwim code. So either way, whether you want to sign up monthly or annual, that option is there available for you. Once again, over on daytradingstrategies.net, if you would like to access over 150 plus custom ThinkorSwim codes. Please hit like if you learned something today. Subscribe to the channel down below if you would like to continue learning. And with all that being said, I'm going to go ahead and sign out of this video. I'll catch y'all in the next one.